Hello, everyone, and thanks for joining us. I'm Asiye Namdar in Washington, D.C. World financial markets take a beating. On Wall Street, the Dow ended trading with the worst weekly sell-off in 4 years. CCTV's Daniel Rinchez is in our D.C. newsroom with more. Daniel.
Yes, Asiye, Friday we saw fears in the eyes of traders and investors worldwide. But the question is this part of a normal stock market correction or something more significant than that?
The latest Chinese manufacturing data triggered a second day of plummeting stock prices worldwide, with a private measure of Chinese factory output shrinking at the fastest pace in more than 6 years. Investors are now considering whether China's economic slowdown could drag a lot of other economies down with it.
I certainly worry that China is going to drive the global economy much closer to outright deflation than otherwise would have been the case. China, after all, has 3 significant bubbles in property, in credit and in investment. And the blow-off of those bubbles does represent a huge challenge for the global economy.
The recent fall in the value of the Chinese currency, the yuan, along with decisions by many central banks to lower interest rates, raises new questions for U.S. central bankers.
This is probably the worst time for the U.S. to raise interest rates, just because, for the sake of it. Because global economic growth rate is falling, and maybe in recession. And globally, everybody's trying to devalue the currencies or lowering the interest rate and try a quantitative easing. And the U.S. is the only country or the only major economy going the other direction.
European and U.S. markets mirrored Friday's drop in Asian stocks as oil sank to a new 6.5-year low, dipping below $40 a barrel. The latest U.S. trading data indicates investors are increasingly skeptical the U.S. Federal Reserve will raise rates in September, as many had predicted.
Now, the big picture here is that downward pressure on the prices of goods and services worldwide is happening, particularly for things like commodities like oil. We've seen that plummet today, and that will affect U.S. inflation data. That makes it much more difficult for the Fed to justify raising rates while this global uncertainty continues. Asiye.
Uncertainty indeed. Danielle Rinchez in our Washington newsroom. Thank you.